people that have the RV, whatever range they have as far as price wise, if you've got this, even say it's $20,000 RV camper sitting in your driveway, you still want to go use it. It's like, why would you spend the money to have it just sit there in your driveway?
This podcast is for educational purposes only. Nothing you hear on this show is legal or investment advice, nor is it an offer to buy or sell securities. Always consult your own legal and financial professionals before making decisions. Welcome back to another Capital Flow podcast. I'm your host, Dallon Schultz. We've got another incredible guest on our show today. If you're looking to raise $100,000 or more for any real estate investment, this is the show for you. And even if you're not in real estate, if you're just trying to learn more about sales and how to connect with people and influence and persuade, this is the show for you. And our guest today, we're going to be talking about a fun asset class here because his specialty is in outdoor hospitality. We're talking RV parks, campgrounds. You're building an RV park around an amusement park. Currently, that was one of the things that our guest and I talked about before the show. So really excited to have our guest, Don Spafford, with us. Don has been in corporate finance or has over 20 years of corporate finance experience and has been investing in real estate since 2017, ever since he left his corporate job. So a lot of experience with numbers and as well as with real estate. I mean, it's crazy to think it's already 2025 and 2017. We're talking 8-9 years now. So Don, thank you so much for joining us today. Appreciate you being here.
Thanks. My pleasure, Don. Thanks for inviting me on.
Well, why don't you take a couple minutes before we jump into it and just share with our listener how you got to where you are today. You went from corporate to entrepreneurship. And so I love understanding everybody's story a little bit. So share a little bit about how you got to where you are today.
Yeah, for sure. Thanks. So as you mentioned, I worked almost 20 years in corporate finance for a company that provides back office support for investment advisors. Before that, I was a store manager at a rent-to-own store and trying to go to school part-time. I was doing that. This was when I lived at the time around Omaha, Nebraska. And so I worked for that company for quite a while until 2014. Then we decided to move from Omaha to where I'm at now in Idaho. So I'd been working remotely since that time. So I was well ahead of the curve for remote work before everybody else was kind of forced to with COVID. And with that job, as much as I enjoyed it and got to learn a lot, and like I said, my educational background was all around finance, investment science, portfolio management, all things with numbers and investing and accounting. But I always wanted to do more. The end goal was, I always had this entrepreneurial spirit, I guess, but I never had ideas. I wasn't going to create a new company and invent something. It just didn't quite flow for me from that. But I started around maybe 2015 or 2016, somewhere there. I started going down this hole of the FIRE movement. I kind of heard this on podcasts, or I saw it somewhere, this, financial independence, retire early. I was like, I want to do that. But, the job I had, didn't pay enough. I didn't have enough of a high income to be able to save hundreds of thousands per year to build up this, $1 million, $2 million nest egg to live off the dividends. So I was like, there's got to be a different way that I can do this. And that's when I soon kind of discovered real estate and understood more about investing in real estate. Started, of course, reading books, listening to podcasts, going to webinars, all this stuff to understand the cash flow perspective. And then I realized, I could still get to that, because the whole point of that FIRE movement was like, you build up enough, in your retirement account to live off the certain percentage of the dividend to create that cash flow you need to live off of. But I was like, well, if I can create that cash flow without having to save up $2 million, then I can still hit that goal. And I realized I could do that through passive income from real estate, and kind of considered that like the shortcut to financial independence was investing in real estate. And potentially I could even get my money back and have, $0 invested and still get to that point. Right. So I was just really all in on trying to make that happen. And my story is probably maybe somewhat unique. And I think it resonates with a lot of people. How I got started was when I was, trying to find my first property and do my first deal. I realized I wanted to have more doors. I didn't want to ever do single family homes. I saw those as too risky, too low of cash flow. If the time is vacant, I got to cover the mortgage. So I wanted to get as many doors as possible. And the easiest way to do that was with a fourplex. So I get up to 4 doors. I can still get a residential loan. And luckily there was a bank near me that I learned about that does 10% down payments for investment properties. So I could get into this fourplex at 10% down. The problem was I still didn't have a whole lot of savings. So what I also discovered through this research and things is that I could actually take a loan for my 401k. So I essentially borrowed this essentially 28,000 for my 401k and had like another 6,000. I sold some stocks and did some things, but $26,000 down. I bought this fourplex in 2017. And I've got a whole story planned around this. How that $26,000 has essentially turned into $500,000 from different things I've done. But a few years later, I was able to refinance that property, pull 6 figures out of it, essentially get my money back plus more. So it's therefore infinite returns and cash flowing. But that money I got out, I was able to reinvest and keep investing in other things. And right now, as you said, like 9 years later or so, I'm actually selling that property now, and I'm still going to make a good couple $100,000 profit on that, and all that combined. I'm saying because that's kind of $500,000 level, just to kind of show how much you can do with so little in real estate if you let time work to your favor and do a lot of things. But that first property is what kind of snowballed everything else to happen afterwards, and start trying to do more and build more and get to the point where I wanted to get into more commercial real estate and syndications, and started kind of networking and people in that space in 2021. And just through, again, networking and trying to make deals happen, found partnerships with people to do some stuff. And I got involved with these RV campgrounds, as you mentioned, mainly because I was looking for a higher cash flow. My goal was always cash flow was number one. And compared to other asset classes I was looking at the time, these were producing more. And so I was like, I got to learn more about this and get into it. And again, as I started doing that and started to continue networking, being active on social media, I got to meet more people and form more partnerships with other things. And so I've got involved with several different things now, which I enjoy. They're all kind of unique and different from standard value add multifamily, because I'd like to somewhat be different from what everybody else does, maybe go against the grain, if you will. I could be somewhat unique and not just follow the crowds, what everybody else does, and find unique opportunities that can produce potentially higher returns and just basically stand out in the crowd, like I said, to be different from everybody else, to get some attention. So yeah,
and
it's kind of
you do
a long path, but I got to that point here, so yeah.
Awesome. And you do stick out. I mean, I think we were following each other online for a while, and then we both attended a real estate conference last year in Salt Lake, and your booth was right across from us, and it stuck out. It was unique. It was different. There were so many other multifamily type of investors there. And so that's really what helped stick out to us. I want to go back and touch on a couple things that you mentioned. First of all, I never heard your origin story, and it's funny because our first purchase was a fourplex in 2018, and that's how we jump started. My wife and I, our real estate, and we didn't have a 401k. I was a brand new registered nurse working in the hospital, and we found a deal that we were able to get seller financing, and he required 10% down as well, maybe 15%, which we didn't have. So we went to a family member and got a private loan. So we were 100% leveraged. I don't recommend anyone doing that, but you don't know what you don't know. And I'm grateful in that moment that we had a little bit of that ignorance, because it gave us the courage and confidence to just make it happen. And that's really what jump-started our career. So I love hearing how similar your origin story is as well. One of the things I want to touch on, when you were talking about your corporate career, and you knew you wanted to do something more different, but you feel like you didn't have that entrepreneur spirit. Obviously, you're 100% an entrepreneur now. And so
I had the spirit. I didn't have the ideas of what to do with it. It's like, I didn't have ideas to create a business or invent something unique, but I wanted, again, I had the spirit. I wanted to do something. I just didn't know what and how. And
thanks for clarifying. So in either case, though, like there was still a limiting belief, right? You had the desire, you had the spirit there, but you didn't know how to create or what to create and go from there. what changed? Because obviously you've created your future, you've designed it, you were able to break through that. What were some of those pivotal moments and things that you had to work through to help with that transition out of the corporate world?
Well, so several things was what led to this. I guess it was that for me, like my father passed away at a relatively young age. He was 55 at the time. I was in my early 20s, and so seeing that happen, and I mean, he didn't have my parents weren't wealthy, right? They were just average middle class family, and didn't even have a big life life insurance account or anything. So kind of left my mother pretty kind of strapped, and she was already at that point, the early stages of MS as well. And then the reason we moved from Nebraska to Idaho was to help take care of my mother. So we moved here to help take care of her. And I knew at some point she was going to need full-time care, and I wanted to be able to have a way to help cover that cost, right? And so seeing all that happen, and of course, thinking of myself, I was like, well, my dad passed away young. I was like, what if I pass away young? I want to make sure my family is taken care of. I don't want my wife to have to go out and get 2 or 3 jobs to help try to support the kids and things. So all this was really all focused about taking care of my family and making sure that if the worst happened to me and I can't work or whatever, that they'll be taken care of. That they at least got a good runway to get kids through college, and not have to worry about anything else for quite some time. So that was always the number one focus. Why I wanted the cash flow, why I wanted to build wealth, was to make sure that they were taken care of. That was goal number one. And so yeah, that was really the motivating factor to it's like, I've got to find a way to make this work and do it. Take some risks, like I said, borrow my 401k if I have to, but I got to find a way to make it happen. Otherwise, there's I'm going to suffer more. The job itself was getting to the point, as anybody has families, your kids grow, they have higher costs. It costs a lot to maintain a family and for insurance and food and everything else. So I was like, I didn't want to go get a second job either myself. I was already, the job I had, I was working overtime, usually 50 to 60 hours a week, and I was like, I don't want to work more. I wanted to work less. So by the time I got into my first property and it was starting to cash flow, I used that as a reason. Okay, I can start working less, take less hours, just do the standard 40 hours a week, nothing more. And so I could have some of my time back to focus on my family and spending time and actually doing things. And then from there, it was just like, I've got to, I was like, I want to get out of this job. I want to be able to replace it with passive income, to really have my time back and spend what little time I have with my kids before they all leave the house, and be able to take vacations and not have to worry about limited vacation time. A big part of that is my wife is from South America, so we want to go down and visit her family, but I don't want to be limited to like 2 weeks to do that. We want to go for a month and enjoy it and spend time there. And so all those things involved kind of just weigh in your mind over time. And it's like, you gotta just get past the fears and make it happen. And but to be honest, for that first property, I was still afraid. I'd never done this before. I was taking a big risk. Taking it for my 401k. If it blows my face, I've got no other savings to pull from. I couldn't really afford to lose it. But I was like, the numbers for me in my mind, the numbers worked. So I just gotta, I felt confident enough that I could make it work and make it happen. So I was like, I gotta just take on that fear and just do it. And literally, as soon as I got past that fear, I was like, okay, let's go buy more. I was at that point, ready to move forward and keep buying. And again, didn't have a lot of money, but year and a half later, I bought a couple more fourplexes, and then got into other stuff from there. But yeah,
and looking back,
almost held me back. But I was like, no, I gotta make it happen.
You brought up some really good points, and looking back, it's I mean, you would do it 100 times again. Like it's what seemed big and scary and fearful at the time. Now that you've gone through and realized it wasn't so, and that it set you up to create this life that you want. Right. Looking back, it probably seemed like it would be a no-brainer decision. But I'm glad you touched on that, because we tend to have a limited field of view, and often that's influenced by our experience, how our belief system, how we were brought up. You grew up in a middle family home. I grew up in a middle family home. Money wasn't abundantly flowing all around us all the time, and there's some stuff that I found that I've had to work through to get to where we are today. A lot of that had to do with my relationship around money. But what you were really emphasizing, and I want to touch on this, is really your motivating factor to take that risk, take that jump, take that leap. And what I found is that there's really three main reasons people act, and that's out of pain, gain, or fear. And in your situation and in mine, it was actually pain that resulted in fear, which led to the decision. But in your case, it was the fear of missing out, of leaving your family stranded. Like, it got to a point where you dwelled on that enough that you decided to put faith in yourself, in your situation, and take matters into your own hands. So you mentioned a lot of things that helped contribute to that. Was there a pivotal moment? Was there a time that it just all suddenly it clicked and you're like, I'm going to do this? Or was it more gradual?
It's hard to say, honestly. I think it was more gradual. Like I said, it kind of started with that whole the idea of the fire thing to happen, and then finding other ways to make that happen, and then realizing I could make it happen. So it was definitely more gradual, I think. Definitely I'd say the starting point early on was somewhat pivotal, I guess, just to say, because I wanted to do it, I just didn't know how. But I was like determined to find a way to do it, right? So it was definitely, I think, I couldn't say one event that occurred or something, um, but I think it was just the idea of working another 20 years or so before I could retire and hope to retire, right? Possibly having enough of my savings in my retirement account. So it was all those things. Like, yeah, I didn't want to have to go, in my 70s or 80s, if I lived that long, to go have to get a job, to pay for medical expenses or whatever, So, um, yeah, I guess it's more of the fear of the future and what could or couldn't happen, knowing that if I kept the path I was on with my job, I probably would not have enough in my retirement account to be able to comfortably retire.
It's interesting. I vividly remember this specific situation because I always wanted to specialize in the medical field, make a few $100,000 a year, and then get into real estate investing. But in my mind, it was 45, 50 years old at the time that I'd be getting involved. And I remember having this conversation with myself. And when I really started leaning into looking at additional programs to specialize, I started feeling claustrophobic. It was the weirdest feeling. I started feeling like the walls were closing in on me. And what I realized what was happening is I was taking myself into the future, 5, 10, 15 years. And I realized that if I was going to spend a few $100,000 more dollars in investing in my education to specialize in something that I really wasn't that passionate about, and I was doing it just because I liked money and I wanted to be financially secure, right, I realized that if I had gone that path, or if I leaned more into the real estate, what path would get me closer to where I'd want to be 10, 15, 20 years down the road? And that continued education and specializing in the medical field was not it. And that was my aha moment, being able to see where I wanted to be. And it seems like you experienced something very, very similar. So yeah, I appreciate you sharing that.
If we go back to I guess far enough, you had me thinking, I guess, kind of what really started me even reading about real estate in books was going back to 2008, the market crash. So, again, in the path I was taking, my goal was to become a financial advisor. I wanted to be the person you go to invest your money, right? So I was on that path. I was studying for the CFA exams, and I had just graduated with my degree, was about to start a master's program. And then all this happened, and I was like, okay, all the jobs I wanted to have were all going away. They're either closing their doors or going out of business or laying people off. And all these people that had their life savings ready to retire are now wiped out and can't. And so that also weighed on my mind a bit. I was like, I didn't want to be in a position to have a job like that where I have zero control over what happens, and people are losing money again outside of my control, but still would blame me for losing their money. And so I was like, I don't know if I want to do that anymore. And so I started, again, my wife became a realtor actually around 2012, which is also part of that starting process to even consider about real estate versus just stocks.
Mm.
And so yeah, all those things kind of combined really what started all those thoughts, I guess.
I I appreciate you sharing your origin story. And to be honest, we probably spent more time on it than I typically do, but I'm grateful we did. I'm grateful we did because it plays into raising capital. It plays into the success that you've experienced today, because your origin story, how you got to where you are today, if there's one thing I've learned about raising capital, is that it's personal. You've got to connect with these people, and maybe you don't tell them your entire life story, but they got to know that there's a real person behind this investment opportunity. And at the end of the day, they're really trusting you and investing with you. So as we pivot into this unique niche that you've specialized in, how has that experience that you've gone through, how has that helped you attract the types of investors that are interested in this outdoor hospitality?
Yeah, well, I tell you, it was kind of funny when this all started. At first, I was also kind of hesitant because I was like, it's maybe is it too different, too out there to, people are just gonna laugh at you and call you crazy. And honestly, at first, it was a little bit that. It was definitely a lot of education. I kind of caught on quickly. I saw I made the need, I guess, or what could happen here. When I started this in 2021, I kind of looked at it like, how self storage and mobile home parks kind of start off slow and all of a sudden it just exploded and then everybody started doing them. I kind of saw this kind of same way. It was like starting off slow, but in the next 5 years or so, a lot of people would hopefully be doing it. And so for me it was I was in some mastermind groups with all about multifamily, and I was like, hey, are they going to kick me out if I'm not doing multifamily? But I got to the point where I was like, you know what, who cares? I was like, I see this as a new path that I don't want to miss out on. I don't want to look down, 5 years down the road and look back and it's like, why didn't I take that chance? Because I saw, what I was seeing at the time in 2021, the multifamily space was kind of like, as we talked about before, is like, yeah, the cap rates were compressing, returns were getting lower, risk was going up, I guess. So I was like, there's got to be something different. And I saw this kind of what really clicked for me was when I talked to some of my neighbors. Like a lot of my neighbors have RVs. We live near Yellowstone Park. It's a big, camping area. So I talked to some of these neighbors in the past about investing in multifamily, and they're all kind of, standoffish. They didn't understand it. They didn't get it. All they saw was what they saw in the news, which was at the time a lot of eviction moratoriums and things going on. And so they were not interested. When I started looking about the campgrounds, I kind of brought up in conversation again, like, hey, would you want to invest in a campground that you go to? And this is now whole different topic, right? Something they understand, they get it, they use it, they live it, really. So,
hey, as a business owner or entrepreneur, one of your biggest struggles is raising capital. Maybe you've gone to the bank, maybe you've been turned down, or maybe you just have never thought of before speaking to investors. The reason the people here at Copless Pro, Dallon and Paul, have decided to partner with us over here at Copple Connections is we not only teach people how to attract and raise capital, we actually put you in the rooms where the capital flows. That's right. My name is Brad Blazer, and I've raised over $2 billion. And over the last 5 years, I have personally taught and mentored hundreds of people around the world on how to attract, raise, and close capital so they can be doing something bigger in life. But it's not only the coaching and mentoring. While we're working together, I put you in rooms of curated events with family offices, broker-dealers, and registered investment advisory firms. That's right. We create the proximity to my network because we know that proximity is power. It's our belief and our finding that no other company out there offering services in the capital raising space is doing that, which is why we have forged this strategic relationship. If you'd like to learn more, click the link below that's provided here in this podcast. And this is Brad Blazer saying we can't wait to work together.
So it was like a no-brainer kind of thing. But yeah, that'd be very interesting. So in my mind, I'm thinking, okay, there's a whole group of people out there that can afford a luxury item such as an RV, and therefore probably have money to invest. And so who better to use your own users of the properties to invest in your properties? So I'm like, okay, there's probably a very big untapped market here of potential investors that would not invest in real estate but would invest in something they enjoy. So that really opened up my mind to what could happen here. So I went down that path, I guess, and tried to get into those kind of groups and people and things. And but just on top of that, what I do to attract investors really not any different than anybody else does that raises capital. You still want to get out there and be seen, and I've kind of forced myself. I'll say this: I'm very much an introvert. So even doing my very first post on LinkedIn was like very scary moment, but I knew that if I wanted to be seen and heard and build up that trust, I've got to be out there and be posting and be regular, going to meetups, go on podcasts, all these things to get past my own fears to be seen and heard and trusted. So, as we all know, when somebody wants to see who you are, they're going to look you up online. And if they don't see anything about you, that makes it more untrustworthy, So in this case, I'm like, I got to be out there and do all this. And so I started being active on social media, going to meetup events, and just for that purpose to have that trust and credibility. So, but when I get on the call with investors, right, as usual, we go through their pain points, what they like or don't like about the other investments they've done, and a lot of people, unfortunately, were either in some of those foreclosed multifamily deals or knew of them, heard of them, or are already oversaturated with a bunch of multifamily. They want to have some diversification, and this is something different and unique. But at the same time, something that most people kind of understand if they don't themselves have an RV, they know somebody that does. They've heard about their RV trips and or at least remember an experience when they've gone camping, they've rented an RV, whatever it may be. And so it kind of feeds on that emotional aspect that, yeah, you can actually go to these properties. It's not, you're not just invested in it. We want you to go there and go enjoy it, have fun, create memories with your friends and family. And it makes it much more of an emotional aspect. And then on top of that, by the way, we're targeting higher cash flows, higher equity multiples, likely higher depreciation. And so all these things can combine makes it, for most people, I'd say an easy discussion, an easy decision to say, yeah, I want to invest. Some people are still kind of on the fence because it's still, when they don't see everybody else doing it, they're fearful that, okay, why is not everybody else doing it? But I've seen myself in the last couple of years, a lot more growth of more people doing it as it's kind of opened up more and becoming more somewhat mainstream. And I think in the next couple of years, we'll still see more of it as more people move into that space because, people go to where the returns are at. And if right now the returns are producing more in outdoor hospitality, they'll move in that direction. A lot more people doing glamping properties and other things. It's a lot more work involved, which I think the big reason a lot of people haven't fully moved into it is because it's not, just hire a property manager and not worry about it. It's you're very much more hands-on involved. There's a lot more active management of it, but with that, the returns are potential for high returns are there. I like to tell people as a comparison, think of like if you have a single family home, you have your long-term rentals, or you can use it as a short-term rental, Airbnb or something. And typically that short-term rental is going to produce higher returns for the same property because you're getting a higher nightly rate versus renting out on a monthly tenant. So that's kind of how these operate with these campgrounds. It's, we got these nightly rentals, or weeks, whatever, short-term rental rates per site, and therefore it can generate a higher income. But also it does require higher management because you got to do things to check people in and out, and got other activities to manage and things like that. But it's it's worth it for those that are willing to put in the effort.
You brought up some excellent points, very, very excellent points. Couple things that I highlighted over here. Number one is knowing who your avatar is, knowing who your ideal investor is. And part of that is knowing how the property performs. To your point, what you just said, like, yeah, there's a higher nightly rate, tends to be higher cash flow, but it's very much management heavy. And so finding somebody that would prefer higher cash flow, understanding that there's more operational risk, I would say, involved is important. And then number two, identifying people that already enjoy using these things. Because if they're already using it and all of a sudden they learn that they can actually invest in it as well, they're already comfortable with that asset class. And so that education curve that people need to go through before they feel comfortable investing, I would imagine shortens significantly because you're already working with people that use this stuff. And that's their field of view. That's their world because that's what they do. So I think that was huge advice that you shared. Now, I have my own thoughts on this that I'd like to share, but I'd like to get your feedback as well. One of the reasons people really push for multifamily and say that it's a safe investment is because it's a basic human need, having shelter over your head. And one could argue that your types of investment is more of a want or a luxury. So I have some thoughts that I want to share, but I want to hear what your thoughts are on that.
Yeah, well, it's a great question, and it obviously comes up a lot in conversation with investors, right? So there's, I guess my take on it, there's two ways to look at this, but also we have some, if we had to come down to like a plan B or plan C, there's other exit strategies that could be used if needed, right? But in general, though, I'd say, again, most people that have these RVs or motorhomes, for example, are very expensive items. Typically we're talking, hundreds of thousands of dollars sometimes, or even up to $1 million for like a big, nice motorhome, right? But so the people that can afford those ones specifically generally are not too affected by economic situations, right? They've got enough high income job or whatever stability that a market comes down, their lifestyle doesn't really change much. So those people are still going to go out and use them and have no problem, right? On the other end of that, people that may have like a small camper or just do tent camping, or even maybe just want to rent a cabin for a weekend, right? Again, if a bad economic situation occurs, people are trying to hold on the money and not spend on things that they don't need. But in general, most people still want to take a vacation. You still want to get away, get time off from your job, and just relax and do something fun. So maybe instead of spending tens of thousands of dollars to go to Disney World or something, they might say, okay, let's just go out for the weekend and go to the lake, and we'll rent the cabin and go boating or something, or skiing, or just swim or whatever, play on the bouncy houses and that kind of stuff, right? This is outdoor fun stuff. So that's kind of typically what we're looking for on we'll say the low end aspect. So there's still, because of on both sides of that coin, I'd say it's relatively lower risk for those kind of problems, right? Because people are still going to want to go out and use it no matter what, on either way, either side of that, right? And then additionally, I'd say if it came down to like a worst case scenario, we go to World War III or something, and people are not doing anything, and we just need to find a way to provide affordable housing. We can easily convert these into either long-term RV parks, where people just kind of come in, park their RV and plug and live there, rent them, or even we could drop in some like tiny homes and turn into like a tiny home village, and still rent them out, and at least enough to sustain it and be not lose the asset, I'd say. So there's definitely different strategies we could go if we had to go down one of those routes, but typically, again, most of the people that are using our properties are not. They want to go out and have fun no matter what anyway. So there's kind of low risk as far as like luxury stuff as compared to saying and taking a trip to Disney World or something that's going to cost a lot more. Or again, it's just it's a lifestyle they enjoy anyway. They go out and hang out with friends. So it's people in that community. The RV world is very kind of unique compared to other I guess hobbies or something people do maybe.
I really appreciate you sharing that. And I agree 100% with you. And what I've realized, and this is speaking from personal experience, yes, having a roof over your head is a need. It's a basic human need. And ironically, these RVs do provide roofs over people. People are giving up their homes to move into RVs, and they're traveling the country. Right. So yeah. To that statement, I would argue that these experiences, these places that you and your team provide are a need. They are a basic human need. You think about the memories and the experiences that you're creating for the families and the people that attend these outdoor hospitality places. That's a basic human need. Having that experience, having that joy. And to your point, when people, if they can afford a couple $100,000 rig to drive around, they're probably in a much better position financially, and they are still gonna want to travel. Like once you, and this is me speaking from personal experience. Once my wife and I started traveling, it became a need. It's like, one could argue that it's a want. If we don't have a trip booked for about 3 to 6 months out, we start feeling it. We start feeling stress, and we're like, we got to get a trip on the books. And it's just a way for us to connect as a family, to disconnect from the world, from work and whatever else is going on. So to your point, I would argue that this asset class does tend to a basic human need. And if nothing else, you're attracting more financially qualified people to not only experience it, but you're also engaging them to participate in these types of asset classes as well as an investor. So not only can they enjoy it, but now their money's working for them because they're going to go there anyways. They're going to experience it anyways. Why not be able to participate in a little bit of the upside? So I think that's an incredible way to approach it. So
I appreciate that. I never I guess, thought about, like you said, like it is a basic need, I guess. But yeah, thanks for appreciate that. The other thing that I guess to mention is too is that people that have the RV, whatever range they have as far as price wise, if you've got this, even say it's $20,000 RV camper sitting in your driveway, you still want to go use it. It's like, why would you spend the money to have it just sit there in your driveway? You want to get out and use it as often as you can to make it feel like it's worth the money, and even if you do sell it at some point, someone else will buy it and they'll still want to go use it. So people are still going to go out and use them as often as they can, which is also partly why we target locations that are within about a 2-hour drive of a major city for most people to get to. So most people are willing to drive a couple hours to go out and go have some fun.
Makes perfect sense. So Don, as we start wrapping this up and you look back on your real estate journey and the capital that you've raised and been able to connect with investors, if there's one piece of advice you could share with somebody that's trying to connect with more investors or to attract more capital for their next real estate deal, what could you share with them?
This might sound oversimplified, but it's just be real. I mean, maybe being an introvert is somewhat of a strength, I guess, to some degree, because I'm not, when I talk to investors, I'm not there trying to put the hard sell and get them to, you got to invest today or you're going to miss out, that kind of, that salesman attitude. I'm just having a conversation, trying to find out, what their life experiences have been, where they're at, what their goals are, and see, how, if the deal I've got can help them meet those goals and needs. And if not, great. If it does, great. Either way, it's not a high pressure thing. It's just, having a conversation and they can feel that I'm truly care about what they want and their needs. It's not about me trying to get their money because I need to get this deal done. It's more like, hey, is this just going to help you or not? And if not, hey, I've got people I know I can refer you to somebody else that does, mobile home parks or storage or whatever else, So it's never been for me. Who you hear me talking about today, what I'm saying, this is me. That's exactly who I am. I'm no different on social media than I am in person and or over a video call. I try to be humble and kind. I'm just here to help people to achieve the things I know can be done because I've done it. So that's pretty much it. Just be real and be honest and don't try to oversell something just because you're trying to get a deal done or to make some money. It's you got to really care about the people you're trying to help.
It's funny when I think about some of the most effective capital raisers I know in our industry, they too would consider themselves introverts. And at the end of the day, I think it's when they get on a call with somebody, they don't know how to be other than themselves. And that actually works in their favor. So I appreciate you sharing that. You actually have a pretty neat opportunity currently that's open for investment. So to our listeners, if you're listening to the show and this space intrigues you or you're interested in getting involved, first and foremost, definitely reach out to Don. We'll have his contact information in the show notes here, but he actually has a current opportunity for people that are interested in this. So Don, take a minute or two and just give them a high level overview, just enough, right? Just enough for them to want to schedule a call with you. Share with them a little bit about this cool opportunity you've got.
Yeah, thank you. It is, so obviously it is a 506c opportunity for accredited investors only, but this one I'm very excited about. We've actually partnered with the biggest water park developer in the country. If you've ever been to any water park anywhere in the country, they've probably either built it or their products are in it. And so they've got this water park they built in 2017 in the Outer Banks of North Carolina. And they've done all the groundwork to get the zoning approved for a campground around it because they see the need and how this will feed off directly with their guests for the water park. And so we've got this RV resort development, ground up development in the Outer Banks of North Carolina, adjacent to and inclusive of this water park. The water park is part of the deal as well. So you're going to get this great cash flowing multi-million-dollar asset that already is included. Plus we're adding on the campground around it. and just going to make it skyrocket and be crazy insane. We're targeting, I'd say 40% plus IRR in a 5-year hold period for investors. So and again, it's just a great place you can actually go to and go have fun with. We covered a lot of details in a webinar we did about a month ago, but this is just it's almost like it was meant to be for the things that had to come in place for this thing to happen. Because prior to this, the area would not even approve new campground development, and all of a sudden it opened up. But there's very limited places where you can do it, and this happened to be pretty much the ideal spot to do it at. A lot of things that just make sense for the location and everything around it. So yeah, let's talk about it and see if it's going to be great for you to add to your portfolio, but also have a great place to go take a vacation. So yeah,
and
I'd love to talk about
what's incredible about this, it's attached to already a cash flowing business. So that in itself already mitigates a lot of the risk, because people are already there. Now you're just building upon it. So super cool opportunity. Don, if people want to learn more or connect with you, what's the best way they can get in contact?
Yeah, well, definitely find me on LinkedIn. I'm very active on LinkedIn. At least I try to be. I'm also on Facebook, but you can also reach out to our website at beyondourcamp.com or beyondourholdings.com. And I think you can schedule a call direct from there as well.
Awesome. Excellent stuff. Don, thank you so much for your time. Thanks for coming in and just being yourself. I definitely picked up on it, and I know our listeners did as well. So appreciate you taking time out of your day today.
My pleasure. Thank you.
And to our listener, again, if you're looking to raise $100,000 or more, this is the show for you. We keep bringing on amazing guests like Don to just share their strategies, their experience, and how they've been able to get in front of and attract millions of dollars. But until then, we'll catch you on the next episode.